Hi there, welcome to Traders Talk, and good to be back with you guys. And it has been a lapse of 2 weeks that we have went for a little travel, and I hope you guys are coping with the market. Yeah, market for the past 2 weeks is not so good. All right, okay, good. Thumbs up, thumbs up. Appreciate that. And welcome to Traders Talk. This is Ming Hon, your host, and we host this show every Tuesday. And basically, we talk about trading the stock market using options. Yeah. So if you are a beginner trader or even experienced trader, this is actually a show for you because we not only go into the strategies, we also go into the market developments and also discuss about basically everything about trading. Yeah, so this is the right show that you should be on if you are actually trading the stock market, in particular the US market. Yeah, and also using options as a trading tool. Yeah, so all right, let's go in deeper into the market. And I think it has been lapse of 2 weeks, and actually last week I tried to I was traveling last week, and I tried to post in a recorded show, but unfortunately, there was a blunder on the mic, and I did somehow it did not connect, and basically I recorded the video, but there was actually no sound. Yeah, but I have actually just did some summary and posted it on our. If you have not subscribed to our new channel, go ahead and subscribe to our new channel. We have actually a new distribution channel where we are actually now on TikTok. Yeah, so we are all into how best to disseminate information to you guys as quick as possible. And of course, TikTok is actually one new method where we are posting our videos. So short videos, more time to market stuff, which you guys can actually also benefit besides only watching the Traders Talk, which is held only every Tuesday weekly once. Yep. So hopefully you can actually see us more on this new channel. So if you have not subscribed, please subscribe onto the channel. I've actually posted that onto the chat box, and otherwise you can just search on TikTok at mystyle work. Yeah, so you can actually connect to us and get notification when we have any new videos. Okay, so let's go to the market right now. And today we are also going to share with you one strategy which we would likely put on hopefully today. Yeah, today we would likely put on today, and we'll share with you this strategy after the market update. Yeah, so hang on, just be patient, and you will get to it quick. Yeah, okay, let's put this. Right. So S&P for the past has been going down, and basically we have actually retraced about let's see how many points here. We have actually retraced, I think for a full 2 weeks, and basically this is actually about close to 10%, 10% for the S&P 500, and that is actually about 427 points. It's actually quite a steep drop, you see, because uh, from the 16th of June, right, where basically we had a 2 months continuous uptrend, we have actually gained about 16% from the lows, 16% from the lows, and of course now we are losing back another 9% from the high, from the high here. Yeah. So of course these are normal for the market to actually go up and down, and of course the news coming from last day's J Powell was not too positive for the market, and as a result, you can actually see also I think one huge dip here, huge dip on Friday itself, yeah, which was 30th of August, somewhere here, yeah. This was a huge dip, and this was actually even before that we had a huge drop. 2 weeks down, and of course, where is the market going? I mean, technically, I mean, we would also not know because, of course, if you look at the price action, or even if you look at the candlesticks, right? Probably on last Thursday itself, uh, a lot of people would have actually thought that this would actually be a good indication. This green bullish candle here would actually be a good indication that the market is actually going up. Yeah, in fact, the market has actually went up last Friday, earlier part of the trading day, and it hit the 50 moving average, and basically it spiraled down. Uh, and close lower before the end of the day. Yeah. So this was what happened, and very normal. There are market makers out there who always try to try to actually kill the longs, right? Do a fake bull trap here, and actually take out all the longs, and make them reach their stop loss level, and actually go in again. Probably, if you look at this week itself, right? I mean, basically, the market can actually go up or even go down, right? Go down, yeah. So that's why I mean, sometimes itself, we don't really look so much on directional trade, and basically we trade using also neutral trades, yeah, neutral trades, and it is as profitable also on like directional trade. But of course, the probability of uh, profit uh, using a neutral trade is actually higher. You get lesser premiums. You get lesser premiums. You take on also a higher probability of profits. Yeah. And if you look at here, I think last week we did mention that last uh, last last week's recorded one, which I flopped and put on TikTok, right? We did mention that the first fallback for S&P last week would be 3,900 points. In fact, it actually dropped to 3,900 points. Yeah. And of course, the next level, which we are actually looking at, is around this 3,700 point, 3,700 point. If it continues to actually drop, this is the next level which we need to actually take care. Yeah. So of course, if it goes up, then of course this 50 moving average is again another level where the S&P need to uh, test for this resistance before it can actually move up higher. Yeah. So these are the key points which you need to actually watch out. And of course, for us this week, we will just trade neutral. Yeah. And of course, the Nasdaq, Nasdaq Nasdaq also, of course, went down similar to S&P for the past 2 weeks. And of course, again, on Thursday, very bullish candle bar. Market went up on Friday before crashing down again um, end of the day. Yeah. Although the jobs report were more or less positive, the rally from the positive jobs report could not hold for long, and of course, the market crashed and closed lower for even for Nasdaq. Yeah. So again, these were the levels. 12,000 level. Yeah. This is actually the level which is now sitting on. What is that? A support level based on the previous low here. And of course, the next levels where it can actually drop down would be around 11,500 points. Yeah, 11,500 points. Yeah. And we are just about 600 points what is that, to this level. And of course, if it continue to go down, it could easily drop to this level. Yeah, and of course, again, this 15 moving average is the resistance level if it actually bounces up. Yeah, from for this week. Yeah, and of course, market indication is on oversold, but of course, oversold here uh, can also be quite long, as we have actually seen even on this overbought position earlier, right? This overbought position was actually also staying on for almost about 2 months, yeah, 2 months. But in between, there is actually always ups and down, so ups and down. Yeah. So this is the market position, and of course, the if you guys have followed our newsletter, right? You guys have followed our newsletter. You would have this was the newsletter which we issued on 29th of August, yeah, 29th of August. And of course, this was we covered something on protection squad, right? Protection squad would mean um, taking on bearish protection on your positions. And of course, we put in here how you can actually protect yourself by buying a put, doing a put spread, sell and out of money call, sell an out of money call. But of course, you only sell an out of money call if you have an existing 100 share position. Yeah. Um, and we never sell this naked. And the other one could also be that you have another long option, which you actually want to protect the uh, position of the long option when the market is actually coming down. You can actually just sell an our money call. And of course, lastly, you can also do a call spread. You can also do a call spread, and this is a bearish trade. Yeah. So we have covered this on 29, which was basically here 29th of August. Yeah, here somewhere around here. Yeah, here. And of course, if you have done any of those trades, you would have been profitable any one of those. Yeah. So please look through our newsletter. If you have not subscribed to our newsletter, go ahead and subscribe. We are putting it out now for free. Yeah, for free. You can actually just subscribe and read on the things which we cover in our newsletter. Yeah, and of course, this week itself, we are going to cover another one, which is a neutral strategy, which is one which we're doing today. This is a neutral strategy. We'll cover this today together with you guys, how to actually set it up. Yeah. Okay. So this strategy which we are doing is what we call. Let me go back. Yeah. This strategy which we are doing is what we call an iron condor. Iron condor is actually a neutral strategy. And basically, what we are trying to achieve is for the stock or share to actually trade within a band till expiry of our option, till expiry of our option. Yeah, and the setup, you can actually do it on any stock, but of course, if you are doing it on indexes or ETF, that would be much safer. That would be much safer because indexes and ETF are not subject to any, how to say, binary events, or it's actually a pool of stocks, right? It's actually a pool of stocks. If it moves, it will not significantly get up or get down when there is actually some sort of news coming through, because it is actually comprising a lot of stocks. Yeah. Um, and that actually much safer to do iron condors on this what is that ETF or indexes. Of course, you can also do it on stocks. You just need to be a bit more careful when doing on stocks to avoid um, earnings period, or if there are any major announcements expected on that particular stock, then you could actually avoid trading during this period for such kind of strategies. Yeah. So let's go to here. Okay. Let we will just go through a sample trade for learning purposes. How to actually set this up. Yeah. Let me share my screen. If you have any questions, post on the chat box. We will go through the questions later on if we have some time. Okay. Yep. So this is the platform. Let me just make it bigger. Okay. Okay. So this is the platform, and basically we are actually doing it on SPY. SPY is actually the ETF for the S&P 500. Yeah. And of course, you can also do it on SPX. You can also do it on SPX, but SPX you got to be a bit careful on the price jumps because the prices for SPX it jumps quite a lot. If you are not familiar with it, then of course you may how to say you may uh, uh, sell it too low or by closing buy it too high. Yeah, so you just need to be careful if you're doing it on SPX. But normally I would actually just do it on SPY. Okay, and basically you if you look at SPY, the current IB rank is 58, which is basically quite high during a time like this. And of course, why this is actually high, it's also because current VIX, right? Current volatility index for S&P is also quite high. Currently, it is at 25. Yeah, currently it's 25. And of course, during more volatile times, it will jump above 30. So, and during normal times when the market is actually going up, then the VIX will probably trade at between 19 to 20. Yep. So at the current moment, VIX is high, and of course, if you are trading premium, that means you are collecting premium from the market. When VIX is high, or when the volatility is high, the EV of the stock or the ETF will also tend to be high, and you tend to be able to collect more premium during this time. Yeah. SPY, and basically, if you are doing an iron condor, we are actually looking at expiry period of between 30 to 45 days. 45 days is optimum, and of course, today itself, you can actually look at doing it at 45 days exactly, which is at 21st of October. And when I do an iron condor, right, basically, I put it very mechanical. I just go to the options chain, right? This is actually the options chain. And to do it very mechanical, I will just go to delta 20. This is actually delta. This is delta. And I will just go to delta 20 and pick up the strike. Yeah. So delta 20 here is about 364. 364. Uh, and I would do $5 width. That means 364, $5 width is 359. So this one I would sell. I would sell at strike 364, and I will actually buy back at strike 359. Yeah, and this is basically a bull put spread. If you actually do this leg, a bull put spread, and this is actually a bullish position. You want SPY to actually go up on this leg itself. Okay, and iron condor would comprise of another leg here on the call side, where if we want which is the bearish position, we want SPY to actually go down. And again, I would just pick delta 20. So just now for the delta 20 put spread $5 width, you collect 85 cents here. And on the call side, we do delta 20 here, and we just pick 419, and then go up to 424. Yeah, $5 with 1, 2, 3. 1, 2, 3, 4, 5. Yeah, $5 width, and you collect $1.72 with this four-legged uh, uh, strategy. Yeah, four-legged. One is actually on the bull put spread, and the other one is actually on the bear call spread. Yeah, so you collect 172. Okay, 172 will actually collect if it expires within the range of we'll just take 419 to uh, 364. Then you actually get the max max profit. Yeah. And of course, the risk which you are actually taking is 328. And normally for such kind of trade, I would tend to actually take risk. That means basically, um, I would actually try to collect one third of the width of the strikes. Strike width is 5, so basically I would want to actually collect about 150 to 160 for iron Condor of 45 days expiry period. Yeah. And then the probability of profit is 58%. It is also quite high, and of course, on the when uh, IV is high, when the IV is high, the expected move will also tend to go higher. This is actually what we call expected move. That means the S&P is actually SPY is actually expected to move plus minus 25 from the level of 393 here, 393 here. Yeah. Okay. So once you are okay with this, you can just click. Let's check. Okay, review and set. Maybe I will just put one. I will probably look again when the market open. When the market open, I'll probably look again on this. Yeah, but basically at 180, if you can get, is also quite okay. Yeah, just put it in first and let's see if we can actually pick it up on opening. So market opening right now. Market opening right now, I think the futures is actually positive, right? Futures today is actually positive. Green. I've actually looked at it during the before the show. It was actually positive, but of course, nowadays, what is actually really happening is that on opening, right? On opening day, there is actually always a huge rally on opening. But the rally does not sustain past 1 hour. Yeah, you can actually see that practically almost I would say almost every day it looks like that. So let's put SPY or SPX. Okay, so this is actually the range. Just now we actually adjusted it a bit, 364 and 419, right? So this was actually 364. This was 364, 419. Yeah. So you just look at the short put and short call as and draw the lines, right? So basically, you want the price to actually close in between the on expiry. But of course, we don't keep the position all the way to expiry. If we actually get a very quick profit, if within a few days we can actually get 25% of that premium, we can also close the position and realign for new positions. If we get up to 50% also within before expiry, right, we will also close the position. So it's not necessary for you to actually wait until expiry of the trade. Yep. So in between that, of course, the stock can actually move anywhere. It can actually go down. It can also come back up. But as long as it closes within this range, then the trade would actually be profitable. And of course, the other reason why I am actually trading this strategy right now is because if you look at the lows and the highs, uh, the current level is actually here is actually at more or less at 61.8% Fibonacci. If you draw the Fibonacci line, right, this level is actually the price here is actually at 61.8, more or less around. I would say more or less put it at in between the middle. Yeah, but of course it is lower than the middle because 50% is up here, right? It's lower than the middle. I would not be so much afraid of it how to say it going lower. I mean, I always take more how to say take more cautious if it is actually rallying above the call side. Yeah, because if it actually go lower, then of course I can always roll the trade to actually take care and adjust on the put spread side if I actually want to leg out and adjust on the losing side if it actually falls below. And of course, stocks or even the ETF tends to go up when it comes down, right? It tends to go up unless the downward momentum or the bearish is so bad that it continues to go down. It continues to go down. Then of course, it is going to be a losing trade. But as long as you can continuously roll it, one day if it actually comes back up, then you're okay. And of course, this level is more or less the lowest level it has actually achieved in this year, lowest level this year. And of course, this would tend to be a strong support at this level. If it reaches, then of course we need to actually look at how to reestablish this by either rolling or doing other adjustments on the call side or call side for this trade. We can do various adjustments that is actually more advanced. I would not want to actually go through adjustments on Iron Condor. Yep. For this show. Let's keep it simple. We are right here, and I think this is actually quite a good trade at this level. Quite a good and safe trade at this level. Yeah. Okay. So coming back to the SPX, I wanted to actually show you the the uh, the unsustainable rallies, right? Which actually happens quite often every day. We have to go down the lower time frame to actually see that. So this is actually the 3 minute time frame. 3 minute time frame. Okay, 3 minute time frame. You see these rallies. This should be the opening on Friday, right? Friday, is it Friday? No, here. Opening on Friday is here. This is Friday. So if you look on Friday itself, right after the jobs report came out at 8:30, right, we had a gap up on opening here, and then we continued to rally after that. I would say this about this is four, no, this is 4:21:33, about an hour, yeah, about an hour where we reached the top here and then it gone all the way down. So this was actually on Thursday, sorry, on Friday itself, yeah. And then if you look here also, this was on Wednesday, if not mistaken. If you look here, uh, the open again, it, it gap up, came down a bit, rallied up, rallied up, rallied up, rallied up. Then after that came down again, and then so these are some of the things which is happening. I mean, the rallies don't sustain. There is actually a lot of people waiting to sell. Waiting to sell. Probably the positions which they have actually kept is already very profitable after the 2 months rally, right? 2 months rally. So they are basically taking opportunities to actually how to say take more profit on each rally. Yeah. So these would probably be early positions which are exiting at the moment. Yeah. So again, levels to watch for SP for the market, right? If it actually comes down more, then you can actually watch out for the reversals. Uh, let's not put 3 minutes. Let's put, let's put the week. Yeah, these are the levels again to watch. Yeah, so if it actually comes down again to 3007 level, yeah, 3007 level, watch for the indication. If it reverses, then of course it would be a very how to say it may bounce off if it drops down this level. If this level itself, it can also bounce up. Yeah, it can also bounce up. But if it goes down further, then of course the risk might be lower because this is actually how to say a stronger support at this level. And of course the 200 down here is also one level which is actually how to say supporting further declines. Yeah, and of course if you're doing option strategy, you can always do trades at levels below by selling a naked put, or by doing just a put spread. You can actually try to get more security by doing it below here. Yeah. Okay. All right. So that's what we wanted to share this week. If you have any questions on the strategy which we have actually just put on, or anything on the market, post it here. If not, you can always also post it on the on the Facebook page. And again, uh, you guys have not uh, subscribed to followed the new TikTok page, which we have actually put on, because yeah, so we are also trying to put on more contents there. So if you can subscribe, that will be great. Then of course you get first-hand information in case we are putting up a trade during the night, or giving out some pointers to on the market, or cautious certain positions. Then of course you can get first-hand notification if you are subscribed to it. Yeah. So okay, happy trading this week. Watch for the levels. If it actually bounces up, then of course it is actually a strong level of support at 61.8% Fibonacci. But if you are not directional, then of course the neutral trade which we have just showed you is also going to be a high probability trade to actually put on. Yeah. So until next week, happy trading, and all the best this week. Yeah. Bye bye.